Good morning, folks, and welcome to Opening Bell with me, Stacy Pereira, this live broadcast on Moneycontrol. And I'm here to take you through all those news and cues that you need to be watching out for that could go on to impact your trading day. So what do we have in store today? Well, yes, we did see the markets extending that rally third day in a go, we could say. But more importantly, it was that India VIX index that really took everyone by surprise. A plunge of 20% is what we were not expecting at all. But what really is this an indicator of, and what could be the factors that could be at play? We'll be discussing all that and more. But first, let me take you through all the top headlines. Now, stocks surged on Wall Street for the second straight session, led by its strong earnings growth as markets rise on strong handover from the US. The GIFT Nifty is also indicating a higher start for the Indian markets. And crude prices have risen as weak manufacturing data in the United States sparks hopes of an earlier than expected rate cut from the Fed, taking Brent crude to above $88 a barrel. Gold, meanwhile, remains range-bound around 2-week lows of about $2,300 an ounce. And Tata Consumers delivers a mixed fourth quarter number. Domestic revenue growth meets estimates, but the beverage volume growth disappointed. Margins come in ahead of expectations, but a one-time expense dents their net profit. And in key numbers to watch out for today, HUL is expected to deliver about 2 to 3% volume growth and margin expansion in the fourth quarter. Axis Bank's deposit growth is likely to outpace its loan growth, while net interest margins may be under pressure, whereas LTI Mindtree is expected to deliver a weak set of numbers as growth comes under pressure. And after its biggest ever revenue decline since 2012, Tesla gets ready to advance the launch of new models, including low-cost cars. Elon Musk says that the EV maker is looking to accelerate its entry into newer markets. While speaking about job cuts, Musk says that it was important to reorganize the company for future growth. The stock surged over 10% in after-hour trades. Well, we do have just about 9 minutes to go for markets to open up, and we'll see where really we are headed, whether that 22,400 levels is where we had started off yesterday, that gap up, whether that we can be seeing a similar kind of start today. Well, the GIFT Nifty is indicating those 22,400 levels, so we'll have to wait and see. In 9 minutes from now, we'll know. But let me also take you through all the FNO data that is coming in and what it's really suggesting. Because if you look at the India VIX index, now that one, which is the domestic gauge of volatility, has dipped by about 19.72%. So close to 20% drop that it saw intraday, coming to that 10.2 levels, its lowest in 9 months. Now this does provide some comfort to the bulls, we could say. But a drop in the VIX like this is quite unprecedented, because previously these readings of about 8 to 9% were only seen when markets were making their tops. So what does this really suggest? Now, a very low VIX is what also we are seeing right now is suggestive that there is not enough demand in the options side, or whether the other words are where traders are not really bothering to hedge their positions. Now, this could be have two ways of looking at it. This extension could also mean that either traders are getting quite complacent, or that there is enough reason for the market to be stable, especially at a time when we are into elections. That's when you see the most amount of volatility. But for the markets to be reacting like that is quite surprising. Now, analysts also have gone on to say that there is this eminent change that we're going to see in the lot size of Nifty derivative contracts from Friday. That is from when the May series starts, is when it's going to be implemented from about 50. That size is going to be reduced to 25. So that could also have contributed to how we saw this sudden plunge in the VIX index. That being said, let's also take you through a couple of the open interest calls and what we are seeing in the call option data. We did see 23,000 strike. See the biggest number of contracts, about 1.22 crore contracts were seen. The maximum call unwinding though was seen at 22,000 strikes. So that could be that support level on the option side. Whereas if you look at the put side, there we are seeing 22,100 strike, whereas put unwinding was seen at 21,300 strikes. So quite interesting to get that data. And if you have to then look at the put call ratio, well, that one pretty much showing a decline at this point of 1.06 versus the 1.14, but still showing that positive sentiment because it is above that one range that we are talking about. So we are seeing more call rights being put in. Pretty much that bullish sentiment in the market are likely to continue. Now, if you look at the stocks that are in the FNO ban, about 3 of them being retained in the FNO list, ban list. NSE has retained Hindustan Copper, Vodafone Idea, as well as Z Entertainment Enterprise into the FNO ban list. What has come out is Biocon, Piramal Enterprise, as well as SAIL has been removed from the ban list. Talking about the fund flows then, where we're seeing foreign institutional investors continuing their outflow, one would say, in April. Well, they went on to sell about 3,044.54 crore worth of shares in yesterday's trade, whereas it was the heavy lifting to be done by the domestic institutional investors, which went on to buy 2,918.94 crore worth of stock in yesterday's trading session. What you also need to be watching out for are big ticket earnings today. We do have from the FMCG pack, HUL, which will be putting out its numbers, Axis Bank, LTI Mindtree, AU Small Finance Bank, Equitas Small Finance Bank, as well as Macro Tech Developers are some of the names that will be putting out their Q4 numbers today. Well, let's then discuss what really is going to be the trigger point. What are we really getting to understand from what this VIX index is telling us? And joining me for that and to give us a strategy of how one is supposed to be trading, I have with me Rajesh Palviya. He's the Senior Vice President of Research and Technical Derivatives at Axis Securities. Good morning, Rajesh. Always a pleasure to have you on our show. Well, Rajesh, firstly, let's talk about what the VIX index is saying and, what really that puts into play when it comes to an FNO strategy. Of course, we're sitting just a day ahead of FNO expiry. So what should be the strategy? What can you tell our viewers this really means, or what is it suggestive of?
Good morning, Stacy. So definitely, sudden fall in VIX is really a surprising fact for the market, and this we have seen in 5 instances. If we run this data for last 15 years, so we have backtested this data, and whenever these kind of fall happens in the VIX, generally market tend to move further higher. We have seen 5 instances, and most of the instances are towards the outcome of general election, but this has happened way ahead of outcome of general election. So I think market is certain about the outcome of general election. That could be the one reason where we have seen all positions have adjusted way ahead of outcome of this event. But if we go with the data, whenever this event has happened for the around 20% of fall in VIX, so market tend to move higher in next 2 to 5 days time frame from here onwards, as we are approaching to the April series expiry. So I think most likely towards the expiry of April series or very first week of May series, we are going to witness a new all-time high trajectory for Nifty as we go with the historical data. So another 2 to 3% kind of up move we could see in the Nifty, as the broader market is also showing good confidence, and the way put writers are aggressive at higher strike, and call writers are now on the back foot. So we believe that this really can extend, and possible upside we could see towards 22,600 to 700. So those who are on the long side of trade, they can hold their position. Now they can trail their stop loss for Nifty towards 22,200 to 250 zone. Till these levels are intact, I think there is a high probability we could register another new all-time high very soon on the Nifty. And so to play this behavior of market, one can look to buy 22,350 call option, which was closed at around 100 rupees. Possible upside target we can see towards expiry is 150 to 160. Keep your stop loss at 65 rupees. Bank Nifty is also now penetrating to its major call concentration area of 48,000, 48,200. Once these levels are taken out, I think there is would be another round of short covering we could see in Bank Nifty, and possible upside in the near term we can see towards 48,800 also for Bank Nifty. So Bank Nifty is also looking promising. Most of the constituent of Bank Nifty is also showing a good strength towards the expiry. So I think Bank Nifty may also contribute to this upward momentum. One can look to remain on the buying side for the Bank Nifty. Your stop loss should be now at around 47,600 to hold long position.
Right. In fact, Rajesh, I'm going to talk a little bit more about this FNO strategy, because if you have to look at how this has played out, now the premiums too have declined quite a bit, both for call as well as put side, one would say. And if this of course is beneficial for those option sellers, but quite negative if you're an option buyer, right? So how would you really actually be playing this out, and especially because are these now already for the next month's contracts, right? So we are talking about the May series then, or how would you place it?
So sudden drop in VIX, yes, it lead to, option premium has also shrunk, but now we are approaching to the expiry. So I think most of the play is already done for the April series. Now for May series, the call and put writer won't get, much reward, because, the premiums are already shrink due to this sudden fall in VIX. So I think now the market will look to play only on the option buying side, because, writing of options will not give a much reward. So risk to reward is not in favor of option writer for the May series at this moment. If at all any pullback in VIX, or if premiums moved up, then only one can look to sell the options. So I think now the play is clear and certain that bullish trend is clearly visible on the market, as everybody is optimistic on the market. So I think the call buyer would take more bets rather to seller. So I think only call buyer would deploy their trades in the May series. For April series, most of the trades are already done, because now we are very close to the expiry. So the premiums which they wanted to, pocket, that is already there in their grip. So I think the profit taking would be there for options side in a couple of trading session on the April series.
Right. So do you think that the market, that this correction is done and now we are ready for another up move? Because like you said, historical data says that, when we are in a position like this, we are normally seeing a bigger upside from here on. And even if you look at the charts, a double bottom bullish piercing line is what we are looking at. So can we say that it's safe to say that there is a further up move, be it not just for the Nifty but also several other sectoral indices?
Yeah, definitely. So most of the sectors, those who were in uptrend, they are continuously moving up, and sector like automobile, real estate, capital goods, even the banking is also looking attractive. So I think the sectors are also showing good sign at this moment. So I think it's across the board buying interest is again on the street. Even the mid cap, small cap has also shown good rally in last couple of trading sessions. So I think it's a broad based buying action is taking place, and I think very soon we are going to register again new all time high, and then again there could be another round of rally across the sector also.
Right. Well, let's address market open there. Then on your screens, we are seeing what the benchmark indices, they're quite propped up high, 22,400 for the Nifty 50, like we were talking about, 0.2% gain. But that's what we saw even yesterday, 22,400 up is where we are. Sensex also quite positively poised there, 73,900 levels. So could be touching close to that 74,000 levels anytime soon in opening bell itself. If you look at the other sectoral indices, well, we did see the bank Nifty also there, positive up and above 48,000 levels is where the bank Nifty is. That positive start, we would say, for the broader indices as well, be it mid cap or small cap. Both of those also saw some good 1% odd gains yesterday and today's trade as well. The mid cap index there by about 0.5% of gains already there for the mid cap index. Let's also look at the other sectoral indices then. Small cap also there positively poised, 0.7% for the small cap. But let's look at the other sectoral indices. Your bank Nifty, like I mentioned, 48,000 levels already crossed in. The PSU banking index, that one also at seeing some good gains, 0.5% of gains there coming in for the PSU banking pack as well. So let's then get a sense of who's really contributing to these to make these gainers in this list today. Well, we are seeing most of these stocks, quite some activity happening there in stocks like Bharti Airtel. Now that one also seeing some new high levels. Cipla on your screens, you can see among the gainers list. There's Tata Steel. There's also Axis Bank ahead of its earning. JSW Steel, Coal India, Bajaj Auto. So a couple of auto names there, mostly metal names that we are seeing. Ultratech Cement, Grassims, both of those, as well as Tata Motors among your top gainers in trade. Well, let's also look at the flip side, and you're seeing Tata Consumer Products, that one reacting to its Q4 earnings. One would say quite a mixed bag that we saw, also taking that dent in its profit, which is why you're seeing that among your laggards. So those are a couple of the names that you saw on your screens, M&M also being among that list. But let me go back to Rajesh and ask him what would be his strategy now that we're seeing we're poised at that good opening that we saw. Should one still be on that, book profits at higher levels and, wait and watch, be cautious at this point? Would that be the strategy you would adopt as well?
So if you are playing for 1 or 2 days time frame, like for April series expiry, yes, one should look to book some profit in range of 22,400 to 500 zone. That's the major call concentration area, and maybe market may have a pause towards this expiry. So those who are looking for only for trading perspective, yes, they can look to buy, look to book some profit. But those who are positional traders, they can hold on their position as the broad-based buying is clearly visible on the street, and we feel that once this expiry settle down, the another rally we can see in the May series itself, and possible broad-based buying action is likely to continue further. So I think the pockets where we are focusing at this moment, that is, one is automobile, where we feel that, this sector can continue further more upside. So possible, one can look to buy Escorts or Eicher Motor. These two stocks are looking promising. Another space that we like is cement. That is also showing good traction. So I think from that space, Grasim, Ultratech Cement, these two stocks are looking very promising at this moment. And we believe that, this really can extend further. MCX is also looking promising. So I think these three, some of the stocks where one can look to buy for a trading point of view. But for index point of view, yes, some profit taking is advisable towards the expiry for traders also.
Right. So we could say you could keep those time frame shorter, tighter stop losses, avoid on days that, you can see data is stacked up in a certain way. That is how you could probably play this markets a day ahead of expiry as well. Rajesh, do stay with us because let's address a couple of stocks that we're talking about. One of them being Tata Consumers, which was top on your laggard list there, and that after the FMCG company has reported, you would say a mixed set of numbers in its Q4, wherein its consolidated net profit has come in at 268 crore rupees, declining quite sharply by about 23% as compared to the same period last fiscal. Though this comes at the back of healthy operating numbers, the top line has been impacted by that exceptional loss that the company has taken of 216 crore rupees. If you look at the revenue from operations, that has grown by just about a 9% on a year-on-year basis, coming in at 3,927 crore rupees. So Tata Consumers is going to be interesting to watch out, but because that really puts out the plan of where we are seeing FMCG companies really stack up. Now they have highlighted a fall in their inventory costs, which has aided that EBITDA as well as margins. The beverage business, that one has grown just by about 3% when it was expected to see somewhere a growth of about 9 to 10%. So that's perhaps where it's really pinching this stock at this point. Even their tea volumes have been quite flat, showing just coming in expectations where you'd say about 2 to 3% for this one. And everyone's really looking forward to the Capital Foods acquisition and how that has played out. Well, we could say the revenues are about 20% coming in for the food business, this including after the acquisition of Capital Foods. So that more or less tells you the picture of how Tata Consumers has performed in this quarter gone by. But we also have HUL, which will be coming out with its numbers later today. Now, this also will be a good indicator of how one should gauge the FMCG pack. Now, 2 to 3% volume growth is what we're also looking at. There could also perhaps be announcements of about a 2% price cut, and that could be really interesting to watch out for, because 150-200 basis points gross margin improvement is also what most polls are factoring in. Higher ad spends as well as royalty and expiration of the GSK deal could also impact the EBITDA. If you have to look at the stock's performance, it is down by about 20% from its 52-week high, and even coming under some pressure today, as you can see on your screens there. That stock still trades at a good valuation, 46 times its FY25 forward earning. So that be the scenario for HUL. But of course, that commentary from the management is what is really going to be looked forward to. Let me bring Rajesh back on and ask him about FMCG stocks and how they've been reacting in the run-up to not just their earnings, but what really is the expectations. Are we seeing a good recovery back again, even though volume growth are so slim? Could we still say there is reason to be looking at FMCG stocks at this point?
So, Stacy, again, most of the FMCG stocks are, consolidating, and still, we are awaiting for, clear breakout on the FMCG stocks. Some of the stocks are showing traction on the buying side. Stock like Pidilite, stock like Colgate, Palmolive. These stocks are, still in the bullish trajectory. But stock like HUL or Dabur, Marico, these all stocks are, still in the consolidation range, and still not able to take out their supply zone. If we discuss for HUL, yes, some recovery is taking place from its recent low, and now stock is holding about 20-day moving average. So looking at the near-term structure, till stock is holding about 2215 to 215. If it continues to hold above those levels, then yes, some recovery is likely to be there in the stock prices, and possible upside we could see towards 2300 in this pullback. If we analyze other stock like Pidilite, that stock is looking interesting, and I think one can look to buy this stock as stock has taken the support from its 50-day moving average, and now recovery is happening in this stock, and we believe that the way stock is moving up since last 3-4 trading session, there is a high possibility that again stock may register its again all-time high trajectory very soon. So I think from positional perspective, Pidilite one can look to buy with stop loss of 2920, and possible upside target we can see towards 3050 to 3100 also.
Right. So in that consumer play, a couple of picks and quite a vast basket that you can be choosing out from. But let's also, broaden this conversation. And joining me now for that is Kunal Valia. He's the founder at StatLane. Good morning, Kunal, and thanks for joining us here at Moneycontrol. Kunal, just give us a broader sense of what we're seeing the markets do, right? Like the short-term view in the markets has been that it has been oversold, but there is overvaluation as well, considering India still holds out quite well compared to how the global peers are playing, and the global risk hasn't really impacted India as much, we would say, be it the Middle East conflicts or the likes. Would you have the similar perspective on how India is placed at this point?
Good morning. While you rightly pointed out that valuation remains a bit on the elevated side, but there are quite a number of positives which India has to offer to the globe right now. On the macro front, we continue to be among the fastest growing countries. The forex reserves, the current account deficit continue to remain within good levels for India. As long as oil does not go above $100 and sustain there, I think India is in a very sweet spot from the performance perspective which investors expect. But if you look at largely the market is divided into two parts, one which is driven by FIIs and the other which is driven by domestic investors. As you know, domestic investors have been steadily getting inflows which goes into variety of sectors, and they continue to maintain the market levels. But FIIs, if you see whether it was January of this year or whether it is April of this year, we continue to see large bouts of selling from FIIs, largely on account of the interest rate scenario in US and the delayed rate cut expectation, which has again gaining pace in the last 1 month or so. So while valuation remains elevated, I think India offers a lot of other opportunities as well. And we continue to remain bullish over next 18 to 24 months in India.
Right. Let me ask you then about the FMCG stocks, because those will be definitely in focus today. We did see Tata Consumers come up with that mixed set of numbers. We are looking ahead of what can we expect from HUL as well as Nestle. Of course, there is other news that triggers for Nestle, like they're being pulled up because of the sugar content in their baby food formulas. All of that aside, as stocks, if you have to look at the FMCG pack, do you think they're out of the wood? Do you think they're, again, those are among some of the stocks that are a little overstretched in terms of valuation? And what would be your picks among the FMCG stocks? Would it be consumer staples or consumer discretionary? Which way would you be swaying?
FMCG will continue to be under the weather for some time now, at least a couple of quarters, till the time we see the monsoon really being good and it helps the rural recovery. But largely for the quarter, we expect very muted numbers, both top line and bottom line for most of the FMCG companies. The rural demand has been sluggish last 3 quarters or so, and we continue to expect the same. The local competition continues to eat away a little bit of growth which comes in on the FMCG side. The price cuts are helping the volume, but they are not helping the top line and the bottom line at all. So we expect FMCG to be consolidating at least for next 3 to 6 months before largely move which is positive from the FMCG side.
Right. Kunal, do stay on with us, because let's answer a couple of queries that our viewers have been sending in, and Rajesh can perhaps take this. Yagnesh Balakrishnan is asking if he can enter fresh in L&T or either L&T Mindtree, as both have fallen quite a bit for long term. He wants to know the perspective on long term on both L&T as well as LTI Mindtree, which will be coming out with its numbers.
So L&T, yes, definitely our view is on the bullish side, and looking at the overall structure for L&T, we believe that, till stock is holding above 3,500 mark, trend is likely to remain on the bullish side. As we see the weekly structure, stock is moving in upsloping channel. That clearly shows that there is sustained buying action is taking place in the stock. Though stock has corrected in last couple of weeks, but stock is now holding the ground around 50-day moving average. And looking at the overall broader market sentiment, we believe that L&T will also start moving up, and possible upside target in near term, short term perspective could be around 3,800 to 3,850. But if he wants to hold it for long term perspective, yes, trend is on the bullish side. He may add further in the decline also. Buy and accumulate is the strategy, and the possible upside we could see towards 4,000 also for L&T going forward. On the LTI Mindtree, still we advise here to wait till stock not manages to cross over 4,800, 4,840 kind of zone. That's the immediate supply zone for the stock on the higher side. Though IT stocks are still struggling to show some run up. So still we believe that LTI Mindtree is still in the consolidation zone. 4840 is the immediate level where one can keep eye. If stock at all crosses those levels, then yes, on a technical perspective, yes, one can buy these stock, and then possible upside in the short term perspective we could see towards 5,100, 5,200 also at that time. But till stock not crosses above 4840, we would avoid at this moment.
Right, so you could avoid LTI Mindtree, but L&T will definitely have those better prospects for the long term. Another query quickly, KJ wants to know the view on MCX, and this one coming right after its earnings. There is an earnings call with the analysts at 4 p.m. today, but if you look at the stock, that's reacting quite sharply, about 5%. Cuts coming in there for MCX, and Rajesh, you're the one who did point out earlier saying that it would be a good opportunity to buy. But if you look at their numbers, well, it has recorded an 88 crore worth of profit versus losses of 5.4 crore. Revenue is also up by about 35% for the quarter, but you're seeing a good reaction there coming there for MCX. What would be the view on this, Rajesh?
So long-term structure for MCX is on the bullish side. Yes, there is a dip towards the reaction to the numbers, but I think again stock is approaching to its important support area towards 3780, 3790 zone. that level is very important for near-term trend perspective. Till these levels are intact, our view is still on the bullish side for the MCX. And once this supply pressure settle down, I think again the stock will start, recovering from these levels. So 37.60 should be your stop loss if you are buying in this decline. And till these levels are intact, we have a bullish view. And once the stock again, manages to cross about 39.20, then this possible, up move going forward, we could see towards 4,000 to 4,200 also on the positional perspective. So buy on dips is the strategy for MCX. 37.60 should be your stop loss.
Right. So we are trading in a very stock specific market, which would be safe to say. But Kunal, what would be those key factors that are going to drive the market rally from here on? We've been waiting on what Fed would do, whether Fed would actually go on to cut rates at all in 2024. That is something that has, kept markets quite at the edge, and that repercussions definitely being felt in markets globally. Do you really see that, things changing, whether the Fed decision could actually have a repercussion, and which could be those sectors that would actually go on to be impacted by such a decision?
Yes, we expect the Fed to cut rates, but not the way the market is expecting them to go about cutting rates, which was a very aggressive stance assumed by the market in a couple of months back. We at least expect 2 to 3 rate cuts by end of this year. So they not necessarily fall out for RBI also to cut rates, but definitely US rate cut is going to pave the way for lower rates for most of the economies. That's number one. Number two, that will lead to FIIs coming back to markets like India in a very, very big way. And possibly that would lead to a lot of quality stocks which have been consolidating for last 6 to 12 months. We will see a lot of buying in those stocks which have not moved up. Largely the quality names in the FMCG space and some of the other IT names as well. But at this point in time, we expect the domestic demand-driven sectors like manufacturing, pharma, auto, and utilities to do way better compared to some of the stocks which may start doing well in last quarter to first quarter of next year.
Right. So that could be the view. And since we're talking about the global perspective, there's also a brokerage call on metals. CLSA has put out a report wherein they're saying that, this whole Middle Eastern conflict as well as these macro environments is pretty much what is going to drive commodity prices. And that's what we are seeing play out for that matter. We've seen gold touch some record levels, even though it has, made a little bit of a U-turn in the last few sessions. But this conflict will definitely have an accentuated impact on energy-linked commodities as well. The war will impact the transportation costs, and which is we are seeing that play out through, what will happen with the whole Red Sea crisis, and that definitely also going on to push that cost curve. They believe that base metals would then still be a better bet, and they're better placed given that backward integration as well as domestic sourcing of raw materials could augur well for most of these metal stocks. They are positive on stocks like Hindalco as well as Vedanta. And among the fairest names, their analysis indicates that JSPL would have a higher earnings given that elevated rebar prices. Let me go back to Rajesh then and get his sense. Metals, that index, if you look at just the metal, Nifty metal index, seeing some good 1% of gains in today's trade. But which could be those stocks among this pack, that is really pushing this higher? Where should one be placing their bet? Are there enough and good reasons, both technically and fundamentally, to be playing the metal pack at this point?
Yeah, so definitely we are holding our bullish view on metal space, and from metal space, our priority would be to on Vedanta is our first choice to buy from the metal space. The way stock has broken out on the weekly as well as on the monthly chart, and the buying interest which we have seen throughout the series, that clearly shows that Vedanta can move further higher, and stock has potential to scale up to the level of 440 to 450 also on a positional perspective. So Vedanta is buy and accumulate can be done in this stock. On the downside, one can keep stop loss towards 370 and hold a long position. The second stock that we like from metal pack is JSW Steel. Stock almost trading near to its all-time high trajectory. Since last couple of week, we have seen some consolidation at higher level, but looking at the overall structure, we believe that once the stock manages to cross above 875, 880 zone, then possible rally can extend towards 950 to 1000 also for JSW Steel. So one can look to buy this stock also. Buy and accumulate is the strategy. Keep your stop loss at around 830. And the third stock that we like is Steel Authority of India. Sale is also looking promising. Stock is now penetrating to its previous swing high of May 2021. And we believe that, in this up move, stock managed to give breakout above this range. And once this breakout happens above 155, 156 zone on a closing perspective, then possible really we can see towards 175 to 180 also on the sale. So on a longer time frame, stock is now giving a breakout. So sale is also buy with stop loss of 142.
So Vedanta, JSW Steel and SAIL are some of those stocks that you can look in the metal pack. And since we're talking about that, I'll quickly try and squeeze in a question, a query that is coming from Alex on Hind Copper. Rajesh, is this also, I know it hasn't featured on your list, but how should one be taking a view on Hind Copper?
Yeah, definitely. So this stock is also looking bullish, and the way stock is holding the ground at higher level, though there is a consolidation in last couple of weeks, but still looking at the breakout, we believe that, till stock is holding about 365, 360 zone, there is a high possibility that, this stock may also exhibit a good amount of rally in coming weeks, and possible upside target we could see towards 430 to 440 also. So Hind Copper is also buy. Overall structure is bullish on the short term to medium term perspective.
Let me go back to Kunal then and get another sectoral view from him. Now, we've seen quite a bit happen within the pharma space as well. In fact, there is also news flow that has come in today from the likes of Lupin as well as Dr. Reddy's Laboratories, where Lupin, there has been an US FDA which has gone on to issue an established inspection report for the company's Aurangabad manufacturing facility. Now, this pretty much, they've classified this facility as a voluntary action indicated, or VAI as it goes by pharma parlance, and your inspection is in this facility was conducted during March 6 to 15th. Now that is the news flow that has come in for Lupin, whereas for Dr. Reddy's as well, there is some kind of action that has come in for Dr. Reddy's, and they in fact have have gone on to recall a couple of their drugs. Now this one is a powdered drug for their oral solution in the US. They're going on to recall about 6 lots due to decreased potency. Now both of these stocks, not reacting much to those numbers, but let me get Kunal and his perspective on pharma and how that whole story is really playing out. It has seen some good moves. We are talking about an US FDA inspection today, but that pretty much is out of the wood, one would say, as compared to what we've been seeing happen with pharma stocks. What can we expect even when in terms of their earnings that is likely to come in next week from a couple of these companies? What would be your view on the pharma pack?
So we continue to remain bullish on pharma. So the expectation on the return side remains in high single digits. We expect the revenue and pack to be higher single digit kind of a thing. But the worries which we have seen relative to IT growth, etc., we don't see the same stimulating back into the pharma sector. So it is important to understand that FDA issues are recurring in nature, but we don't see at this point in time any major issue, and treat this as a more of a passing cloud across all the companies and the FDA issues which are coming to light.
Right. So that being said about the pharma stocks, let's also put our focus on insurance companies, because there again we are seeing a lot of news flow coming in. Of course, there are earnings that have also come in, like the likes of ICI Prudential. Day before we had HDFC Life as well put out its numbers. So those ones pretty much giving up us a picture that things are good for the insurance companies. If you have to look at ICICI per se, ICICI Prudential, they have registered a profit or profit after tax of about 174 crore rupees, whereas this is a 26% jump compared to the corresponding quarter. Now, what is the factor to watch out for with this is the value of new business, or VNB. That one has declined by about 26% on a year-on-year basis, coming in at 776 crores compared, and this is down. Even the margins, the VNB margins too are down by about 1050 basis point at just 21.5%. compared to the same period last year. What is interesting is the management says that FY24 has been a transition year and they expect rates to be more normalized by FY25. So they have taken this hit, and the counter also they're seeing some bit of negative reaction post this earnings. But Kunal, back to you, a broader sense of how one should be viewing insurance companies and that whole space, be it, not just the regulatory front where we keep seeing a different change in rules that are being played out as well. But how do you see this space? Is there more room for people to be entering and stocks that look attractive within this space?
We prefer general insurance over to life insurance companies. Here, overall for life insurance business, the valuations continue to remain a larger cause of concern, as we see with most FMCG companies as well. So there are pockets when market offers during the correction phase, we find some value coming out of some of the life insurance companies. But at this current level as well, we feel that the valuations do not justify the prices for the life insurance companies.
Right. So valuations do not justify that, you would say. I wonder if you use the same even for LIC, because we saw that stock also pretty much take to new highs, get surpass those levels as well, and then see that bit of correction. I'm going to quickly wrap up with one last query that is coming in on Asian Paints. Rajesh, what would be your view on Asian Paint? Is there a reason for a fresh entry, is what one is asking on our feed?
So the stock is now recovering from its recent low, but still looking at the short to medium term trend, still the stock is in bearish mode until the stock not manages to cross above 2950. That's the important level on the higher side for Asian Paint. Once this breakout happens, then yes, there would be confirmation of bottom formation for the stock. Though we have seen very significant correction in the stock in recent past, but still stock is not able to take out the supply zone. So 2950 is the key resistance area for Asian Paint. Once stock crosses above those levels, then yes, one can look to buy the stock for trading perspective, and then we can see target towards 3050, 3100 also. But till the time stock may remain in the consolidation, I think trader may avoid at this junction, but those who wants to invest in this stock, they can buy and accumulate the stock with stop loss of 2760.
Right. So long-term perspective, you could look at Asian Paints. Traders perhaps could avoid this at this point. Kunal, last word from you. Which are the sectors that you're betting on in this current fiscal, and why? We have, all the macros put aside, which ones do you think actually have that zing factor that could take markets higher, and, where would you be placing your bets?
Pharma, which is a combination of both domestic growth as well as part of global growth. That is one sector where we are bullish on. But largely we are driven by the demand which is coming from the domestic business. So possibly utilities is one sector, defense is another, and companies linked to large scale manufacturing is one area where we are really, really bullish for next 2 to 3 years.
Right. So interesting. Manufacturing is among your picks, and you're also looking at pharma. Rajesh, finally to you, your top picks that you're recommending for our viewers today. What have you looked at? What are the charts telling that we should be looking at these particular stocks?
So definitely Chambal fertilizer is looking promising, and the way stock has given a breakout, I think Chambal fertilizer can continue furthermore upside, and possible upside we could see towards 415 to 420 kind of zone. So one can buy Chambal with stop loss of 388. Another stock is from chemical basket, that is SRF. That stock is also approaching to its highest level for the April series. The way stock has recovered in current week, that clearly shows that there is a potential for further more upside. Possible upside target we could see towards 2730, 2740. So SRF is buy with stop loss of 2600. And the third stock where we are focusing at this moment is SBI card. That stock is also showing traction, and we believe that SBI card can also exhibit rally from the current level. Possible upside we can see towards 780 to 790. One can buy SBI card with stop loss of 730.
Right. So interesting picks that Rajesh has for us. And if you look at the markets and how they are performing, Nifty managing to hold on to that 22,400 levels. The sensex also about just 0.2% higher. Nifty Bank as well at that 48,000 levels, propped up quite perfectly. So we'll have to wait and see where these indices really managed and what really happens through the trading day. But let me thank both my guests, Rajesh Palviya as well as Kunal Valia, for joining us this morning. Thank you, gentlemen, for helping our viewers with their queries as well as giving them some perspective of how markets are really headed moving on from here. But with that, it's a wrap and goodbye from the entire team that puts this piece together. Thanks so much for watching. But do please post us your feedback in the comment section and also follow us on the link at the bottom of your screens. For the rest of the updates, do stay tuned to Moneycontrol as well as the Moneycontrol app.